YouTubers! Mike Martins here with the Mike Martins channel. Another great article from Better Dwelling. Guys, if you want to see more housing discussion all wrapped up in one great show, don't forget to subscribe to the channel and set your reminders here for Trends in the Housing Market, a show that's been going on for years. There it is, Trends in the Housing Market. Last week's show, a lot of good call-ins, lots of good people calling in. And if you want to call into the show, it's very easy. Just add me on Skype, Mike Martins 1980. There it is. If you want to be on Trends in the Housing Market anywhere in the Commonwealth where we're seeing the same patterns. CMHC, Toronto and Vancouver real estate delinquencies rise while the rest of Canada falls. So what's going on? Well, obviously, Vancouver and Toronto are the biggest, most expensive cities and surrounding areas. So secondary tri-cities and quad cities. 2 hours drive is getting out of hand. And what places aren't being affected as much? Well, places like Montreal, Newfoundland, and Prince Edward Island, places that are now seeing migration and movement of people that are leaving the big cities, right? We had a mass exodus of people leaving all the major cities. It's happened in Australia, it's happened in New Zealand, it's happened in the UK, it's happened in Western United States, and it's happened all over the major cities in Canada. Canadian real estate markets are seeing mortgage delinquencies fall, just not in Toronto or Vancouver. Equifax Data Crunch CMHC shows the national rates of delinquencies fell in Q1 2020, breaking down the numbers. This trend is stronger in some real estate markets than others. Montreal, for instance, is seeing their delinquency rates drop to multi-year lows. Toronto and Vancouver are on the flip side of the start and are actually seeing delinquencies rise. Again, guys, if you have to work an average wage earner, not medium, low wage, average wage earner needs to work 25 years to afford to put a down payment on a townhouse in Vancouver or Toronto, it's not going to fly. It just won't fly. Affordability levels are there. Capitalism works if wages keep up with inflation, and that hasn't happened in 30 years. The mortgage delinquency rate is a percent of mortgages overdue. Toronto Equifax numbers are mortgages that are more than 90 days overdue. Pretty straightforward, but there's two things to keep in mind. Seasonality and level. Sorry, I'm getting a lot of messages here. Sorry, guys. Mortgage delinquency rates, like other forms of credit delinquencies, tend to be seasonal. When looking at seasonally sensitive numbers, quarterly changes don't tell us a lot unless there's a sudden abrupt change that's not seasonally observed. Instead, it's a year-over-year change of the quarter that's more important. So this is the quarter, basically, that's going to bite the bullet, is this next quarter coming up. We're past halfway through the year, and we're looking forward to the Q3 and 4 of 2020, because, man, 2020 has been a year of years, eh? The next note to keep in mind is there's no universally high or low level for delinquencies. Some regions, like Montreal, had higher levels of delinquencies. Cities like Toronto and Vancouver are always lower than the national level, with regional variances like this. It's more important to focus on the velocity of change, right? We talked about the velocity of money on the channel many times. If Vancouver had the same level of delinquencies as Montreal, but with Vancouver's supersized mortgages, it would be catastrophic for the economy. It only needs to be up a few points for the real estate market to be in trouble before there becomes an emergency. Now, this is going to get worse before it gets better, because too many people signed on with these huge jumbo mortgages they couldn't afford to get. They're going to keep dropping rates. The only way they could fix this right now, they tried the first-time home buyers loan because they couldn't get first-time home buyers. I read an article last week on Trends in the Housing Market where first-time home buyers, BC can't find first-time home buyers anymore in the province of British Columbia. When you can't get that to fly, when you can't get fresh blood in the market, it's over. The middle class does not. The middle class will cease to exist in the province. So the next note to keep in mind is there's no universal high or low for level of delinquency. Some regions like Montreal have always had higher levels of delinquency. Cities, Toronto, Vancouver, I already read that. Canada mortgage delinquency fall. Canadian mortgage delinquencies were falling across the country for the first quarter. Of the rate of mortgage delinquencies fell 0.29% in Q1 of 2020, unchanged from the previous quarter compared to the same quarter last year. This was 3.3% lower. Some delinquencies are seasonal. The quarter-over-quarter change is less significant than the annual change. In this case, delinquency rate was improving on the national level. This is Canada Q1 mortgage delinquencies. So there it is, Q1. It's actually not as high as before, but watch this. Toronto mortgage delinquencies rise 10%. So this is Canada as a whole. Keep that in mind, people. So that's across the board. It doesn't look that bad, right? So when you're looking at a benchmark price across Canada, when you bring in Saskatoon, Regina, Manitoba, all those other provinces like Alberta, it brings the average wage of the federal across the country. It brings the wages down to benchmark value because it doesn't look so bad. But when you take Toronto and Vancouver and put it into its own category, you start to see the detrimental effects on the average worker. Toronto mortgage delinquencies are rising from all-time lows a few years ago. The rate reached 0.11% in the Q1 of 2020, unchanged from the quarter before. Compared to the same quarter last year, it was 10% higher. This was the biggest Q1 mortgage delinquency since 2017. A key difference between then and now being it was falling back then, and it's rising now. There's Q1 Toronto mortgage delinquencies, and then obviously you see it going down here. Things look like they're getting better because they keep lowering interest rates. And right here, 2015 is when things started to get in, I guess, in check. And then that's when a lot of foreign investing started coming in. Vancouver mortgage delinquency rises 8%. Vancouver real estate is seeing mortgage delinquencies climb again. The rate of delinquencies reached 0.13% in Q1 2020, unchanged from the previous quarter compared to the same quarter last year. This is 8.33% higher. Vancouver hasn't seen a Q1 rate this high since 2017. Wasn't all that long ago. However, like Toronto, it's going the opposite direction right now. Q1 mortgage delinquencies. So there it is. From Q1. So this is the average from Q1. So we're going back to 2015 to now. And obviously, it's starting to pick up. You can see it here, picking up. And Toronto, you can see it pick up. You can see it all pick up. Montreal real estate delinquencies fell 13.3%. Again, they're going down. Delinquencies in Montreal are going down. Why? Because you could still pick something up for under $300,000 in a good part of Montreal if you look hard enough. Bidding wars are taking off there. Bidding wars are becoming a thing there big time. And it was a rare phenomena there. Now it's just everywhere. Okay. Rising mortgage delinquencies are easy to dismiss as a pandemic related. That is until you realize it takes 90 days of non-payment for a loan to become delinquent. So Equifax is a good measure, a good instrument, a good tool to follow when it comes to looking at R1s, R2s, up to R9, looking at the plaintiff and docket, insertions by collectors over the years, looking for gaps on file, looking for all kinds of things on file to make sure someone's credit score is basically life story. You could look at someone's credit score and tell their life just by looking at what is presented there. So before the pandemic hit, so the government's mortgage deferral plan that began in Q2 is likely to slow down the number of reported delinquencies. However, this trend is expected to resume and triple by the end of this year. So guys, we've been looking at this for a long time, and this was already in the works. Now, I'm going to tell you guys a very scary story, and I brought this up many times on the channel, but you got to just clue into this for a sec. The only way they could fix this is if they go into negative interest rates and they abolish cash. So you can't remove or have an outflow or a runoff on the banking system. So people don't go run and take the money out of the banks. They're just going to abolish cash, blame it on COVID, and go ahead and go into negative interest rates where they start punishing savers, and people that owe money are being rewarded. And yes, believe me, they're doing it already in Europe. They've been thinking about it in Australia, and they've been thinking about it in other countries in the Commonwealth. And that's something they want to trend towards because they just don't want to put our economy on autopilot. They don't want to put it the way it should be. Let it go on autopilot. I made a video the other day about Frankenstein's monster, comparing the banking and the system that we have right now to Frankenstein's monster. They created a monster that basically, they created this monster for the well-being of mankind, but they thought they were helping us, but in reality they created a monster they can't kill. And that's the problem. And they created a monster that if they do take it out, it's going to be detrimental to tens of thousands of families that bought into this thing, right? It's almost like a lot of people buying into a bad cell phone plan, if you know what I mean. You bought into a bad cell phone plan, you got to pay out the stupid contract, you got to pay all that crap out. That's kind of what it is, right? But picture half the country in a bad cell phone plan having to get out, but not with a couple of $1,000s to get themselves out, but hundreds of thousands, if not millions of dollars per family that have gotten into this mess. Now, the people that own, they're noticing that property taxes are going up. And we discussed that too on Trends in the Housing Market. Property taxes have been a major, major issue for families. So I kind of want to throw this out there. And I kind of wanted to, I guess, talk with you guys about this. And I've been saying this for many years now. It's old. This is not. I'm not coming on the scene about the housing crisis and the collapse and the break. I'm not making those videos I've made 5 years ago warning people. And the people that didn't buy, thank you for your emails. Thank you for your suggestions. Thank you for the flowers. Someone sent me flowers here yesterday at the store from Australia. Thank you for buying local flowers and sending them to me here and telling me your stories about how you didn't buy because I told you not to. And people from all over the place that have been emailing me and letting me know. That makes me feel really good that I've at least reached out to people. Guys, calculate your TDS. Calculate your total debt service ratio. Find out your CGS. Find out where you're at. Find out where when you get back to work, do you have a steady employment? Are you going to refinance? If you decide to, what are you going to do, right? What options are your bank offering you? Let me know what you guys think in the comments below. I look very forward to reading. Guys, again, don't forget to subscribe to the channel and be part of the channel. And Trends in the Housing Market tonight, we'll be talking for people all over the Commonwealth. Call in. I'm looking for first-time callers this week, and we'll talk soon. Thanks for watching, guys.